NVIDIA may have seen its day in the sun.
Some of the biggest names in AI are taking the biggest hits right now.
I think there's a lot of volatility yet to come. I am a firm believer that it was not the final low.
After 50 years on Wall Street, data analytics expert Marc Chaikin says the worst of this fall is not over yet.
The biggest stock that I don't want to get in front of right now is
Marc will share 3 stocks retail investors should stay away from right now, but he also says it's not all doom and gloom right now.
all of the underlying fundamental factors are bullish.
Chaikin also shares 3 stocks that are great buy opportunities for retail investors.
The stock has held up quite well.
That's a really interesting pick. It's a stock we haven't talked about on this channel yet, too, so it's not as mainstream.
I'd rather find the next generation of stocks.
Plus, stick around for the end of the video when he'll share his favorite stock in the tech sector right now and how investors can still thrive in this down market. Let's dive in. Marc, so great to have you back on the show today, talking about kind of what's going on in the market in general and one of the hardest hit areas, and that's tech. What's your take on what's happening in the tech sector right now?
Well, right now you've had price earnings ratios compress in what was previously known as the Magnificent Seven. They're not so magnificent anymore, down over 35% from their highs. But I think basically the earnings power of the big companies like Microsoft, Amazon, Alphabet, and so forth is still very strong. But because the stock market has basically gone into a bear phase, you've had a compression in PE ratios. And also you've got interest rates that going up instead of down. And that typically has a negative effect on valuations. So I think tariffs have created some concern about the state of business worldwide. The U.S. economy and the European and Asian economies are obviously going to be impacted by wherever we land on tariffs. But it's also a question of liquidity. If you need to raise cash as a money manager, where do you go? Well, you go to the most liquid stocks or the place where you have the most exposure, and that's been tech.
Yeah, that seems like a really good reason why we're seeing such a sell-off in tech right now, is just because that's where most of the money was for so long, at least the last year or so. I want to talk about the question on everyone's mind, though. You've given a good reason as to why, kind of a reasonable reason, but I think the fear people have is that the AI movement might be over, that any gains that are left to be made are over in AI. What's your take on kind of that thought process?
I think you have to break down AI into 2 or 3 buckets. One are the people providing the hardware, the firepower like NVIDIA, AMD, the people who are providing the large learning model engines, whether it's from Google, OpenAI, or Anthropic with their Claude engine. And that area of the business is under pressure for a series of reasons. One of them is that people have figured out that they can build these models a lot cheaper than they thought they could. And so data center construction is being put on hold, which we thought was a very, very long-term growth play. Amazon announced that they were putting on hold some of their commitments for data center leases. Same thing with Microsoft. But then if you look at the people who are using AI, to enhance their business offerings, that's where we still see enormous opportunities. And that would be everything from cloud computing companies who are using AI to make their environments more efficient, to cybersecurity stocks, which have already incorporated AI to make their offerings more intelligent, more timely, to companies like Palantir, where they're using AI for the Defense Department and just garnered an enormous NATO contract 2 weeks ago. So it's the implementation of AI that we always thought was going to be the growth area.
Absolutely. And we're already seeing that play out in the market. Like you just said, Palantir, a great example of that. I know you have some different specific stocks to talk about for us today, including some AI areas or tech areas that might be better to avoid right now, and one area of tech where there is still some money to be made. So maybe let's start with that. Let's start with which area in the technology sector, even in this down market, you still see some good opportunities.
Well, we mentioned Palantir. We took a second bite of the apple at Palantir in our Smart Money Trader newsletter. We had recommended Palantir when it dipped back in January, and were fortunate enough to exit 3 weeks later with a 52% profit. When the stock spiked up to 106 on earnings, went even further a few days later. The recent pullback gave us a second chance to get back into the stock. So we got into the stock at around 72 and it's trading at 95 area recently. So that's one stock that I like from the long term. They're very dialed into some Defense Department initiatives that will not get cut because they're so critical to our ability to utilize technology to wage whatever wars we're going to choose to wage over the next 20 years. And it's volatile enough that you get these pullbacks because the valuation is very, very high. So and I don't call this buying the dip, by the way. I think you have to distinguish between sort of the rote buying of a stock when it drops 10% and real opportunity when the market presents us. And that's what you get in a stock like Palantir.
Yeah, I wouldn't call Palantir buy the dip either. With the same kind of dip we're seeing in other sectors of tech, Palantir's kind of define what's going on in the rest of the market right now. It's a very unique stock. What are some other stocks that you're seeing right now in tech and maybe in certain sectors of tech that are kind of define what's going on in the market?
Well, a recent recommendation of ours is Veeva Systems, VEEV. And Veeva provides cloud computing support for the medical research industry. Medical research is obviously critical growth area for all of us, and AI is going to play a big, big part in the medical research area to the point where specific drugs are going to be tailored to someone's own genetic makeup. But without getting too far into the weeds, Veeva Systems provides cloud support for medical research. And that is a growth area. We just recommended it last week in one of our newsletters. And what I like about the stock, as opposed to the company, which has a great story, is that it hasn't gone into free fall. So, as you know, the power gauge rating fluctuates from very bullish to very bearish. But we have an overlay which basically says when we get into a bear market, we know everything's going to drop, except for the most defensive stocks. So we modify the rating from bullish or very bullish to neutral plus. And neutral plus is a very shorthand way of saying that all of the underlying fundamental factors are bullish, but the stock's in a downtrend. And the downtrend is likely because of the overall market. But I don't want to do what is affectionately known on Wall Street as catch the javelin. You don't want to put yourself in harm's way, stand in front of a runaway train. So I'm looking for stocks like Veeva that are in a trading range, a well-defined trading range, as opposed to having broken down dramatically. So in a waterfall type decline. And Veeva is a perfect example of that. It's a stock that has a defined high and low over the last, I'd say, 5 months. And to the extent you can buy it near the bottom end of that range, I think you're very, very solid ground. And also we look at Chaikin money flow to see if the smart money is actually buying that weakness. And in the case of Veeva, they are.
That's a really interesting pick. It's a stock we haven't talked about on this channel yet, too.
Yeah.
So it's not as mainstream as some of the other names in tech you might be thinking of. I also loved that you pointed out you're not looking for ones that are a super high buy rating right now. Even a moderate one is a good indicator in this kind of a market that now is the time to buy. Do you have one more stock for us, for our viewers out there, that's kind of defying the market trends that is more of a buy even in this down market?
All right. Well, I'm gonna save one tech stock for last, but I'm gonna give you a stock that I don't think I've ever seen a better looking chart, and that's DG, Dollar General. Uh, Dollar General has formed a very, very bullish pattern. Its power gauge has recently turned bullish. when you think about what could be going on in the economy with tariffs and so forth, people will look to get more for their dollars, and Dollar General is in a really good position fundamentally to benefit from that. And the stock is curling up and making nice new highs, not in a dramatic way, but over the shorter term. So DG is a stock that we've recommended recently that I think actually has a very, very attractive chart pattern and good underlying fundamentals.
Very good. That's a nice retail bonus stock pick for some of our viewers today. I love it. We'll get to your final AI pick. That's a buy later on in the video. But I also wanted to have you talk about kind of maybe some don'ts out there. We've done a lot of videos recently on this channel talking about some really big names in AI, chip stocks, other names out there that are at these really big 52-week lows. Some of our analysts see them as an opportunity. Others say they're not done falling yet. I'd love to hear your take on some of those bigger names and whether there is opportunity in this downturn, or if it's, like you said, not a stock you want to get in front of right now.
So the biggest stock that I don't want to get in front of right now is Oracle. It has a bearish power gauge rating. It's been in a downtrend for the last 6 months, way ahead of the market peak on February 19. Oracle peaked in November and it peaked at 190 and it's trading down around 120 right now. It just doesn't look right. Their earnings have been disappointing. The analysts are cutting their earnings estimates. So Oracle is a big, big stock that is positioned in cloud computing. Maybe they're using AI, but everything that we do at Chaikin Analytics says this is a stock to avoid. And on any rallies, get it out of your portfolio.
I think that this is just as valuable for viewers to know what to avoid and what to maybe offload right now in this market. Do you have another name that you can share?
I do, and this one, it's hard to say a stock that's dropped from 45 to 20 is fun, but here's a company with the symbol AI. Now, wouldn't you think that this stock would be a barn burner? Company is called C3.ai. It's in the software business. They've just never quite cut it in the artificial intelligence boom. So C3 AI, it's a company that's not making any money. The market cap has shrunk a bit. It's only 2.5 billion. It was 5 or 6 billion. But if you're lured by the symbol AI, you're going to be sorry. So let's avoid C3 AI, and the symbol is AI.
Good advice for investors out there. I do want to hear your thoughts on some of the Mag 7 stocks. Are there any warnings you have on what's happening in some of those Mag 7 stocks right now?
They're a totally mixed bag. Tesla reports earnings on Tuesday after the close. This is not going to be a good quarter. We sort of know why. They're boycotting Tesla in Germany and Canada. California's sales are weak. So Tesla, it's Mag 7, but it's really Elon Musk, and he's all over the news, but not in a good way these days. On the other hand, I think that Amazon, Microsoft, Alphabet, all very, very strong, and Apple in terms of being cash cows. And Apple is obviously impacted by any trade war with China, but President Trump gave them a carve out, or at least it looks like he did. So the good news with Apple is that the administration recognizes that this is one of our absolute American gems of a company, and they don't want to destroy the golden goose. So these are very long-term plays. NVIDIA, I actually don't have a strong opinion here. The stock has corrected from 160 down 150 down to below 90 2 weeks ago. There's so many ways that NVIDIA could come under pressure. Chinese competition from Huawei, loss of demand if people stop building data centers and so forth. NVIDIA may have seen its day in the sun. On the other hand, Microsoft, Apple, Alphabet, all cash cows. And at the right price, these are stocks that you can own. I think they're not going to be what they were because one decade's winners are typically not the last decade's winners. So I wouldn't throw the baby out with the bathwater and just dump these stocks, but I'd rather find the next generation of stocks like Palantir, like Veeva, where you've got a new generation of buyers coming in.
I think that is your specialty, Mark. That's why we love having you on the channel, is that you are always ahead of the curve with picking stocks, getting those stocks before they become as well known as the NVIDIA is. You recommended NVIDIA well before everybody was talking about it. And that's why we love, again, having you on this channel. And I think that's why viewers love to hear your stock suggestions, because historically they've proven so, so well. Now, I know you have another stock pick to share with our viewers here in this video yet today, but before we get to that, I do want to share how our viewers can learn more from you, because you have so much knowledge to share. Check out this latest full-length video from Mark, where he really dives into all of the knowledge he has to share on what's going on in AI right now. Plus, he has a very little known AI stock to share more about in this latest video too. You can scan the QR code or click the link in the description of this video anytime to learn more from Mark. You don't want to miss what he has to share. All right, Mark, I'm really excited about this final stock pick you have for our viewers today, and it's in a tech sector that you're really bullish on right now too.
Well, we like cybersecurity. The criminals are not going away in a trade war. They're still operating as business as usual. And we love Fortinet, symbol FTNT. It's one of the stocks in our 2025 buy and hold portfolio. The stock has held up quite well in this um, bear market for tech. And right now, analysts are still raising their earnings estimates on Fortinet. So here's another stock that's sort of in a trading range, similar to Veeva. Weakness that we're seeing on a sort of transitional basis, I think, is a buying opportunity in Fortinet. The fundamentals are strong.
Another great pick. You've really had so many great stock picks and stocks for our viewers to avoid right now. But I do want to see if there's any other insights you have to share with our viewers who are really just trying to navigate all of the volatility in the market right now.
Well, yeah, I think for investors, it's important to have a plan in a market like this because there's a lot of uncertainty. Fear is clearly driving a lot of investment decisions. And Warren Buffett has famously said that one should be greedy when other people are fearful and fearful when investors are greedy. The problem is that fear right now is based on uncertainty. How will this tariff war play out? And typically fear is based on world events, a potential for a war over China with Taiwan or the Cuban Missile Crisis. Fear that's driven by uncertainty doesn't necessarily compel you to buy stocks. I think you have to take a wait and see attitude to figure out how this is all going to play out. The train is not going to leave the station without you, not in this convoluted tariff driven environment. So I'd say have a plan, know what you want to buy, and let the market come to you so that you're buying at your price instead of paying up for a stock. It's not necessary right now.
Really good advice for investors kind of wondering what to do in this market. I do have one final question to throw out to you, Mark, and that's wondering, do you think we've hit the bottom, or do you think there's still a lot of volatility yet to come this year?
I think there's a lot of volatility yet to come. The big question is, was that low below 4,900, which would have officially put the S&P into a bear market had they closed there? Was that the final low? And I am a firm believer that it was not the final low. Typically, a bear market or a steep decline like this forms in the shape of the letter W, not a V-shaped bottom. A V-shaped bottom would have been March of 2020 or October of 1987. But typically, a serious waterfall decline like we just saw ends in the shape of the letter W, which means that we're likely to come down and one or two times break the lows that we saw back in mid-April.
Yeah, get ready for some more zigzagging in the market this year.
Indeed, Bridget.
Right, Mark. Thank you so much for your time today, and thank you for watching. If you want to check out more of our interviews with Mark, we have those linked here on this video too. As always, everyone, happy investing.